because we teach that you put together your investor pool first, right? That's what you need to put together first before you find a deal. So you got time to do that. All you're trying to do is get these guys, you're gonna take this out to them, get them all excited about what's going on. When you find a deal, you're gonna bring it back to them. But you got to get that investor pool built up. And this process we kind of just went through, when you get through the pitch book and you make it and you start talking to investors and you're very clear about what your problem is, you're totally excited. The light comes on for you. All of a sudden, bang, I get it. And that bang, I get it is the confidence you need to raise money, to talk to investors. So we talked about having the fear, and we talked about the other side, the confidence. You get the confidence by having a process, a system, right, to follow. And when you get good at that, following that system, you're going to have a lot of success. Raising money is a process. It's not an event. You don't just go out there and just raise money. It's a process. You have a whole process to get things set up, and you got to work that process. And the better you're working that process, the more money you're going to raise.
Yeah, and could you elaborate on the process a little bit, or some other things that I don't know, that we need to walk through?
Well, we'll talk about it here in a second. I want to talk to you about the 4 steps to raising money to build your pool of investors. So maybe we just go into that.
Okay.
The first thing you got to do is you got to understand the process, right? You got to understand what happens. You got to understand that raising money happens before you find a deal. I've got too many people that come to me, 95% or more, that think you got to have a deal tied up before you raise money. Wrong. You got to get that money tied up. Now, if you have a rich uncle, you have a rich dad, a rich grandparent, a grandparent that will give you the money, it's easy to go get the money. But most people don't have that. So you got to get it lined up. Let's just say you got a deal tied up. You got 14 days, maybe 30-day due diligence, and you got to go out and raise that money. It's too risky. It's not safe, because if you don't get the money raised up, now your earnest money is at jeopardy, and you could lose that earnest money, and you look like a turkey out in the marketplace. You got to make sure that you got the money raised, not money raised, but the pool of investors lined up first. So you got to understand first, the main thing is you got to have the pool of investors built up first. And so my goal is to, let me pull up my notes so I don't miss something right here, is to talk to you about how to do that. You're going to pool your investors out of the gate. You're going to take that pool of investors and you're going to build those pool of investors, and you're going to get to the point where you have enough of those investors that you're going to go out to your marketplace, and now you're going to go find a deal. You're going to find that deal, and it might take a couple months, but you already have investors to go back to. Once you get it tied up, you're going to go back to these pool of investors, and you get them all excited, say, hey, Mr. Investor, I've been looking for the last couple months to find the perfect deal that matches our plan that you like. I finally found it. We're going to load the truck on this baby, right? That's the process you go through. So the first thing you got to do is you got to create your pitch book. Your pitch book is the core of what you're going to be doing. It's your business plan, so to speak. It's how you're going to play the game. So I told you that one of my investment strategies at the time was doing the Hispanic, right? So I'm going to go out and buy underperforming apartments in emerging markets, and I'm going to reposition them towards the Hispanic demographic and create a lifestyle. I build that pitch book, and I go out and build that pitch book, and now I have something to talk to investors about. A lot of people think I'm just going to go start talking to investors, and I always say, what are you going to talk about? The investor's not going to understand what you're talking about. You got to have some sort of tool to talk to them about with. So you're going to have a pitch book or a business plan, right? Same thing. So once you have the pitch book all done, you got to take the step 2 is you got to go out and start to build your list. Now, what's the best list to build? What are the right people to go after? You're going to go after, the first thing you're going to go after, family and friends. This I call list 1, family and friends. And family and friends are the most likely ones to give you money. That's where most new businesses start, ones that are just getting off the ground. That's where most money starts. But you got to be careful. You got to go to Christmas dinner, so you don't want to lose anybody's money. So be careful on whose money you take. That if you do take somebody's money, it's not going to be not a big pain if they lose some money.